Okay, and we're back. We're going to be covering Chapter 1 of the Government and Not for Profit Entities, and that's the abbreviation there, NFP. Now, when we talk about, there's a lot of different governmental entities, and the governmental entities are kind of split into a couple of categories. The first category is general purpose governments, and those could be what you would normally think about state or local, could be counties, municipalities, townships, but it could be a whole bunch of other types of districts that have a specific use. And let me flip back to my notes here. Those could be things like independent school districts, some sort of special purpose like flood control, irrigation, conservation, those sort of things. Now, looking at the numbers, obviously there's only 50 state governments, right? Hopefully there's not more of those, but there are over 90,000 local governments, over 3,000 counties, over about almost 20,000 municipalities, 16,000 plus townships, which is a lot. Seems like a lot to me. But so all of those are running under some form of the type of accounting that we're going to be studying. So when, I don't know how many businesses there are, but that's a lot of governmental organizations. Now, if we go down to for the nonprofit, those are things like colleges or private colleges, hospitals, museums. There's all sorts of not-for-profit entities, but there are, according to the IRS, there are over 1.5 million registered not-for-profit entities. So between those two, government and not-for-profit, even though it's a very small part of what we study in the accounting curriculum, there's actually a lot of jobs. There's a lot of jobs. There's a lot of business or activities, economic activity going on in these type of businesses, or not, I don't call them, in these type of entities. So we shouldn't just dismiss it out of hand, even though it's probably not the accounting most of us are going to be doing. There is a lot of this type of accounting happening. So there's actually three governing bodies, but we're looking at, or the book initially tries to define what is a government or a not-for-profit entity. And the first one is from FASB, which is the normal standard setter for for-profit entities. And it says a not-for-profit entity is one that does not expect repayment or benefits from the resources provided. So think about that. It means, like, if someone donates money to a college or donates money to, St. Jude's or something like that, it's not that they're not expecting some benefit to happen. We should think of it more along the lines of they're not expecting a benefit directly back to themselves. Whereas in a for-profit business, if you buy goods or services from a company, you're expecting to get those goods and services back to you directly. So whatever the donation or the grant or the funding that happens for these different types of entities, the first definition, at least from FASB's point of view, is that whoever is doing the giving is not expecting back to them directly. The second one is obviously fairly straightforward. The purpose is for something other than for profit. So they're not trying to use these resources, whatever resources that are granted, funded, donated. They're not using these explicitly to make a profit. Now, if you make a profit, it's not the end of the world. That's okay. But they're not being their performance measurements are not being based upon for profit. And we'll see what the performance measurements that they're looking at here in a bit. And absence of defined ownership. Well, what do we really mean by that? It means that there are no, what we would, we spend a lot of time in regular accounting talking about shareholders and stockholders, right? If you buy a share in a company, well, you have a couple of rights, right? You can vote on the board of directors. You are entitled to, if the company is liquidated, you're entitled to a share of the proceeds, although that's, as a common shareholder, common stockholder, that's probably not very likely. But there are, when we talk about regular for-profit entities, that shareholding and stockholding is a big part of the accounting that we do. and that is not present here with the government and the non for profit entities. So when we look at these three, we can say the first one is they're, they're not normal customers, right? People who give to not for profits are not expecting benefits directly to them. The second one is saying there's not normal profit. Even though there's profit, that's not how we're being measured. Whereas typically for-profit companies are truly being measured on their, well, how well they grow the value of the stock, but also net income is a big indicator of performance. And the last one is that there's no normal shares or no normal stock. Now, GASB, if you haven't heard of the phrase or the name GASB, that's the Governmental Accounting Standards Board, whereas FASB is the Financial Accounting Standards Board. Well, as you can imagine, GASB was created to oversee and to set the rules for governmental accounting. And at the heart of their process, whereas FASB is basically saying, how is it different from a for profit company? GASB doesn't have that same focus. GASB is just saying it is a governmental entity, and how the things are decided is in government. There's for federal government, there's the executive branch, the judicial branch, the legislative branch, and then all of the local, state and local ones have their own similar formula of checks and balances. But, each of these are in a pecking order. The federal government can tell the state governments some things to do. The state government can tell the local governments some things to do. And so there is some intermixing among those. And how all those things get decided, GASB is basically saying it's not by their standard setting board, it's by whoever the people are elected to make some of these rules as far as how these different organizations, the state, local, counties, municipalities interact. Ever since I got back from Portland, my shoulder's been killing me. I've got to go to the doctor. So pardon me while I groan a little bit here. Okay, let's move on to the second learning objective. Now, I can make this probably a little bigger. Let me see if I can do that here. Okay, so it doesn't, I'd have to fiddle with the assignment in the broadcast software. Anyway, this is, I could probably do a little bit bigger. Let's see. This chart is in your books, and all it does is show that there are several different things here that we kind of alluded to, but gives you a little bit more definition. Let me see if I can. Okay, so hopefully you can see my cursor now. I think you can. Okay, now we just mentioned Financial Accounting Standards Board, FASB, and the GASB. And you notice this one we already knew about. We'd already been dealing with. FASB oversees for-profit organizations. GASB deals with state and local governments. It's these other two boxes that we need to pay attention to. These two boxes are both not-for-profit organizations. The difference here is that FASB oversees those type of not-for-profits that are non-governmental in nature, whereas GASB is in charge of those type of not-for-profit organizations that are governmental in nature. So, for example, St. Jude's, the Children's Hospital, that's probably a FASB non-governmental. But if I were to think about a big power producer like a dam, that's probably a governmental not-for-profit organization because it is providing services to a governmental region. These two put together, FASB and GASB, are overseen by the Financial Accounting Foundation. The truth is I'm aware of its existence, but you rarely see anything from them. So I think it's more of a just sort of a holding company or a holding organization that oversees FASB and GASB, because these two are truly independent standard setters. They don't work together, they work independent of each other. So I think the Financial Accounting Foundation is probably just some organizational thing for funding. That's probably how these two boards get funded. Now, separate from state and local governments, you have the federal government. It's on page 16. Yes, thank you. The state and local government are handled by GASB, but the federal government has its own set of rules, and that's the Federal Accounting Standards Advisory Board, FASAB. Now, I don't know if any of you remember the movie, but there used to be a movie called Dave, Dave, and it was the two stars, and it was Kevin Kline and Sigourney Weaver. Basically, the plot was Kevin Kline was some local, I think he was a not for profit person who was just doing good works in his local community. But his claim to fame was that he really looked like the president. Well, the president goes sick and or disappears, and so the chief of staff and the vice president come and get this guy, Kevin Kline, to pretend to be the president. And what ends up happening is Sigourney Weaver is the president's wife, except they've got a very bad relationship. But Dave, the new, fake president, comes in and tries to mend fences with Sigourney Weaver. But he also, coming from a not-for-profit background, he decides that he wants to audit the federal government's books and try and get their books to balance. And so there's a big part of the movie about him trying to make sense out of the government books. And I don't know, it may not even sound like that it's that funny, but it's actually a very wonderful movie. So if you ever get a chance, you should take a look at that. Just from a sort of a rom-com point of view, but also the fact that you know we need to have more accounting movies, don't we? Right? You can't just be Ben Affleck in the accountant. So who are the governing bodies, or who are directing the governing body, the FASAB? It's the Comptroller General, and I'll just point out that word, comptroller. Now, in a for-profit business, the controller is typically the head accountant, but we don't use the word controller when we talk about governmental entities. We use the word, for whatever reason, we use the word comptroller. So comptroller is like controller, meaning it's typically the head accountant. So the comptroller general is the head accounting person in the government or in the federal government. And the director of the Office of Management and Budget, the OMB, that is a very powerful funding position. And of course, the Secretary of the Treasury, well, what do? Well, they print the money, right? So the head accountant, the person who's in charge of the budget, and the person who prints the money. Those are the three people who are interested in how the federal government runs its books. Reporting objectives. And again, here we've got I've taken a couple of these things from the book, and this is going to be, again, it looks a little bit small, but you'll be able to find it in the book. I'm going to just kind of go through and mention some of the important aspects here. Now, the reporting objectives, I want to start off with the federal government, because the FASAB have stated four different specific goals. They want budgetary integrity, meaning they want the budget to make sense. They want to show operating performance. And here's the first time we're going to see the word stewardship. But we'll see that word quite a bit as we go through this book. Stewardship means, you know, when a person invests in a company and buys shares in the company, of course, they want the company to use their money wisely, but they have different metrics in which they say, okay, are you using my money wisely? First of all, do the price of their stock go up? Well, that's using your money. They don't really care about anything else typically. They want to know whether or not they're going to get value for money when they invest in a company. But here, how do we know, or how do people know that their taxes or any funds given to a not for profit are being used correctly? More than just, gaining a profit. And so stewardship is that sort of concept, is whether it's a governmental entity that's getting taxes from the taxpayers, or if it's a not-for-profit who are getting money or other resources from people who are donating, both of those constituencies want to know whether or not the government or the not-for-profit entity are using those funds correctly, or using them in the best interest, or using them according to their mission. So stewardship is that concept. And then lastly, for those of you who've already been through both information systems and through Audit 1, it's not enough to be running your organization. You have to have a system of controls, of internal controls. And so you can imagine, especially at the federal government level, internal controls are a very big deal. They want to make sure, how many, it used to be back during, the Iraq War days, people would uncover things like golden toilet seats that the government was buying, or someone had ripped off the government this way or that way through procurement. And so systems of controls are always important. And it's funny because when people are setting up companies or people are working on their businesses, they don't really think about how to set up internal controls at the same time as when they're setting up their business. They usually come afterwards, and sometimes they don't fit very well. So the federal government has these four things, and you might, and I'll throw out there, remember COSO. Remember when we studied COSO, which was the governing body for how to look at internal controls. But in addition to internal controls, COSO said there were three main things they wanted companies to be able to do from a management perspective. They said they wanted managers to focus on improving efficiency and effectiveness of their operations. They wanted their financial statements to be clear and transparent, and they wanted to have them be in compliance with any other regulations. And there was a fourth COSO that was added later on, that they wanted to have adequate strategic planning. So you'll see in a lot of the things that we're talking about here that COSO and those type of ideas keep reappearing. So just keep in mind with that. The other important thing about the federal government, as opposed to the state and local government or the not-for-profits, is that the federal government's so big that typically the right hand doesn't know what the left hand is doing. Most of the time, especially when we learned about accounting financial statements, we said financial statements were for external users, right? The external users could be creditors, investors, it could be the SEC or the IRS, or it could be the board of directors. Well, here, the federal government's so big that some parts of the government don't know what the other parts are doing. And so they have specifically said the reporting objectives for the federal government are not only for external users, but it's for internal users, because there are so many users of this information, and because it's a different type of reporting structure, there's a lot more detail about what was the intention of the use of the funds supposed to be. And so this allows both internal and external people to be able to use the federal government reporting. And that obviously is a good question, for an exam, for a quiz, is that, which of these three is both internal and external? Well, it's the federal government. The state and local government is, if we read some of these things that they're talking about here, is comparing actual financial results with a legally adopted budget, assessing financial condition and results of operations, and determining compliance, assisting and evaluating efficiency and effectiveness. So you can see those last two are directly from COSO, right? Efficiency and effectiveness of the operations, determining compliance, and what is the financial condition of operations. So those are three normal types of things we would want to see any type of organization do well. But notice the very first one is comparing actual financial results with the legally adopted budget. Now, In managerial accounting, we study this, right? We study how is a budget made. We talk about standard costing, and then in the next chapter or in subsequent chapters, we talk about variances, right? Because actual results hardly ever match the budget, and this is what's going on here as well. But notice we have the addition of the word legally adopted budget. So when we have a state and a local government that is creating a budget, they are basically saying this is our promise to the taxpayers about how we're going to spend the tax money, and therefore it's legally binding. So this is an additional, I guess, a requirement on the budgetary process that we haven't studied when we talked about it in managerial accounting or in principles too. The last one, and so state and local governments are for external users as well. The last one, the not for profits, let's take a look at some of the concepts that are going on here. Making resource allocation decisions, assessing services and ability to provide services, assessing management stewardship, there's the stewardship again, and performance, and assessing economic resources obligations and the net changes in them. So here, if we read between the lines, what are they really asking about here? They're asking about an idea that we want, again, it's for external decision makers, but we want to provide our external decision makers, how do I want to phrase this? If you are a St. Jude's again or something like that, where you're almost in competition with other not-for-profits for people who are donating money, right? And so a lot of the reporting objective for not-for-profit organizations is to attract and to prove to potential donors, like a potential investor, that your organization is doing the best possible work it can with other people's money. And so you're trying to be sort of like a normal for-profit set of financial statements in that you're trying to affect the decision making of donors, except that they're donors who are not expecting anything directly in return, rather than investors who are expecting a return on investment. So there have been, we'll get to it as we go further on, but if you've ever evaluated or seen some of the literature for not-for-profit organizations, one of the measurement statistics they talk about is out of every dollar you donate, how much of it actually goes towards the program use, towards whatever the mission is, and how much of it is captured or almost wasted by overhead. That's a very common performance statistics. And so the reporting objectives, you can see why the not-for-profit reporting objectives would be different from the federal and state and local governments. State and local governments are just saying, we agreed through the budgetary process to do this. How did we do? The not-for-profits are almost in competition with others to get the scarce resource, which is the donation dollar. So all three of them have relatively similar, but still markedly different reporting objectives. Just at the top there, I have reporting objectives, purpose is public accountability, and there's this idea of interperiod equity. And what that means is if you have, for the state and local governments and the federal government, are you living within your means? Well, I think if you have any concept of the federal government, especially, or the state and local governments, there's not many governments in the U.S. that are living within their means. In fact, I did a quick search, and I don't know of many that are actually not borrowing money to fund operations. If any of you are involved in local government, is this also true in your I know Lexi is involved somewhat in Lead Deadwood. Is Lead Deadwood, are they operating at a profit, or are they in the black, or are they bleeding money? If you happen to know, I'd be interested in finding out. Okay. Everyone doing okay? All right. What are you watching on Netflix while you're pretending to listen to me? Let's see. Now, the last three learning objectives are to, if you were to ask Deadwood, they would say they are losing money. Okay. And of course, no one wants to raise taxes, but that's typically where it goes to, where it comes from. The last three learning objectives are just looking at these three different groups: the state and local governments, looking at what their financial statements look like, the federal government statements, and the not-for-profit statements. And that is the where we're going to for tonight. So let's take a look at the state and local statements. And again, you'll see some familiar items. At least, hopefully, it's familiar to you. The very beginning here, it starts off with management's discussion and analysis. So today in class and yesterday in audit class in Rapid City, we looked at some financial statements. We looked at Nike and we looked at NVIDIA, and we looked at the table of contents. And I was asking, well, where do we go for to get the actual required financial statements? Well, most of you, I think I pointed out that before the financial statements, there's a section called Management's Discussion and Analysis. And I basically said, ignore that. That's management cherry picking the good results and trying to state their case. That you didn't have. Okay. Most of Deadwood's money comes from, I'm just reading from Lexi's, comes from gaming revenue and historic preservation. Is the local school district, is that an independent school district, or is it funded directly by the city? Because there are a number, that's one of those type of special purpose governmental entities that is for one purpose, and that would be like the independent school district. It's independent, receives its funding through property tax levy. I see. Okay. So in for-profit, it's not that I don't read it, but that is not one of the things I typically take into account when I'm trying to invest in a company. I don't want to have, the company blowing sunshine up my skirt, on my pant leg. So I don't read management's discussion analysis. The only time I would read it is if there is a potential big change in the industry, and I would read it to see how they're responding to the big change in the industry. But most of the time, I feel like it's not really that useful to understand, to understand their PR. But that is 100% different for not-for-profit and governmental accounting. The management's discussion and analysis is not only much more important, it is required in most cases. So we start off with the idea that management's discussion and analysis, because this is, rather than a for-profit company trying to sell you a bill of goods, management's discussion analysis is really their mindset and approach to how they're using your funds. And that is important. That would be something that I would be interested in, or that people who are donating to not-for-profits should be interested in. What is management's mindset about how to go about using these funds correctly? So it's important to show that while for-profits have an MD&A section, but is not as useful as they would think it is, here in this venue, we're going to be using it quite a bit. And it's here, you can see I said required supplemented information. It is actually an acronym. There are certain amounts of information that are RSI. In addition to the financial statement, here at the state and local government, it's required. The next line here, we're looking at two sets of statements, a government-wide financial statement and a fund financial statement. So these two are different in their approach, and they're different in their accounting methodology. The governmental-wide is looking at economic resources, and you can think of this as kind of being the balance sheet. When I talk about economic resources, I'm really talking about assets. But whereas a company may legally own its assets, it's not to say a government doesn't own its assets, but it owns the assets on behalf of the people. So we don't call them assets typically, we call them economic resources. And so we don't say what is the net assets. We would say what is the net position. So when we're talking about resources that a government is been granted or given or purchased with taxpayer money, we call those economic resources. Whenever they change up or down, we call that a change in position. And so we would want to know what is the net change in position. In other words, did assets go up? Did assets go down? Or I should say, did economic resources go up or did economic resources go down? And, well, let's see. I kind of wrote this wrong. There we go. Don't you feel better? On the fly editing. Um, the governmental wide financial statements, basically the balance sheet, is done according to accrual basis. So it will be more similar to what you are used to. But be aware that, remember, what is the most important thing when we talk about accrual basis? Accrual basis is based upon the idea that we recognize revenue when it's earned, and we incur expenses in the same time period as they are used to generate revenue. So even though the balance sheet is an accrual basis, it we it doesn't seem like it's that big a deal because it's not talking about revenues and expenses. Where the revenues and expenses get handled are in the fund financial statements. And we call those, rather than economic resources, we call those financial resources. So we have economic resources, which are assets and all that sort of stuff. And then we have financial resources, which is basically running the budgets with the funds that are given us. So we can call that cash. And for the most part, it is cash that we have. But the funding that we have, that we're running our programs, is reported in this thing called the fund financial statements. And essentially, it is sort of an income statement. And it's basically the short-term use of funds in comparison to what the budget is requiring. And so we report these fund financial statements because of a need for operational accountability. And if you think about, the income statement is also a statement of operations, right? It's looking at what is the revenues that you brought in, what are the expenses that you incurred, and so it does also look at management's effectiveness in running the business. Now, I'll just point out that we do not actually, and I think we actually get this on the next page, but I have used the word expenses, but expenses are specifically an accrual basis term. So we're not going to use it. We have to be careful about when we use expenses. There are going to be some points where we will use the expense because certain types of not-for-profits, the non-governmental not-for-profits, are based upon FASB. And so we would use the word expenses there. Here, remember, we're looking at state and local governments. The state and local governments are guided by GASB. So if you remember, expense has a very specific meaning under FASB. An expense is some sort of outlay of cash or other resources to generate revenue. Well, we're not generating revenue here at the state and local government. We're using funds towards a mission. So we're not going to use the word expense. We're going to use the word expenditure, which is just a more generic term for outlay of funds or outlay of cash. Now, what type of accounting basis do they use for a fund financial? The modified accrual. Revenue is recognized in the period available. Now remember, we're not generating revenue. Revenue is the amount of funding that we have. And then expenditures when the obligation is created. Now, it seems a little complicated at this point in time, and I agree with you. We spent so much time trying to to get you to understand exactly what our revenues and what our expenses, and now we're kind of tossing that out the window. But we will get to a point where hopefully it'll be more understandable how all of these things fit together. But just recognize, I guess, at this chapter 1 level, that there are two major statements. There's the government wide for the economic resources, the fund statements for the financial resources, and we're going to use the words expenditure rather than expenses, and it's modified accrual. This is sort of a recap that's in the book of that what I just mentioned there. The statements, the government-wide use of funds and fiduciary funds. I'll mention those here in just a second. The fiscal accountability is the governmental fund financial statements, flow of current financials. So the basis of accounting, the accrual versus the modified accrual. Now there are some other types of funds, and these are called proprietary or fiduciary type funds. Now these are like when I set up my mother's trust or something like that. There are times when people have created trusts. I'm trying to think of one off the top of my head where I can't think of a good one. That would be a good example of a state or local government trust or a custodial fund. But these are somewhat government business type government activities. They're doing specific things, and we'll talk a little bit more later. But just recognize that in addition to the financial operating funds, there can be some other funds, and they're termed either proprietary or fiduciary funds. Now, what is the type of financial statement that's used by state and local governments? It's called the Comprehensive Annual Financial Report, the CAFR. And I didn't realize this. I thought this was required, at least as far as I understand. I think most governments require it themselves, and maybe this is a state. Maybe in the states I've lived in, it's been required at the state level. So I guess maybe this is a state by state thing. But they're basically the financial statements that are produced at the government level, state and local government level, are much more detailed than you would have in our financial statements. Yes, we have an annual report, but a lot of that is voluntary information, whereas in the comprehensive annual financial report, a lot of it is, I guess, expected, if not mandatory. So what are the sections? Well, we have an introductory section. And then in the financial sections, notice the first thing right off the bat is the audit report. State and local governments are audited. Then we have the management discussion and analysis, the MD&A, the basic financial statements, and their notes. It's not to say in for-profit accounting that we don't have notes. We have a lot of notes. But the notes in state and local government financial statements are more extensive. They're used more for explanation. They're just a more comprehensive set of notes than you would expect from your normal SEC filings. RSI, those are the required supplementary information. So in addition to the MD&A, depending upon the state or local jurisdiction, there are other certain things that you would want to know. And then other supplements as necessary. And what this is a little different, again, from the for-profit type of financial statements or the different types of reports, is that typically there is a statistical section. And depending upon the type of government entity, it might be something as simple as demographics. But let's say you're a prison system, right? Let's say you're an independent government agency that's running prisons. You may want to know a whole bunch of different statistics, about the amount of prisoners, or how many prisoners per cell or something like that. There could be a lot of extensive statistics that you would want to see and have covered in the different types of government agencies. Everyone still doing okay? I'm going to move on. Okay, the federal government statements. So every year when the budget comes out, they print these things, and I don't know how many trees they kill. And the next time the budget is issued, I'll point it. I don't think it's going to happen. I'm trying to remember, when is the federal government budget window? I forget. But these things, people run out to the bookstore and buy, or not here, but in Washington D.C., people run out and buy these budgets, and they're huge, thick things. I mean, they're like War and Peace, the size of War and Peace or something like that. But remember that the governing body for the standard setter for the federal government, and only the federal government, is this FASAB, the FASAB. And remember, their directive, their reporting objectives is for internal and external users. Now, what sort of things go in there? Well, because this is for the citizens at large in the U.S., they have a plain language citizens guide on how to read the budget. Now, believe you me, I don't even think, even with that guide, it's probably still very difficult to wade through the density of all of that information that comes out. There is typically in the federal government a reconciliation section. Now, a reconciliation section is basically what we covered sort of in the variance versus the budget section for-profit corporations or for-profit businesses. And that basically says, here's the budget. And remember, for the state, local, and federal, here is the legally binding adopted budget. And then here's a whole bunch of analysis on what were the financial activities that were put according to the budget and how effective were they. Did they do more than they were supposed to? Did they do less? So basically the variance section. Interesting, because it's such a big part of the federal government's budget these days is Social Security. I don't know if you've ever heard the phrase, it's the third rail of federal of governmental politics. Well, whenever you hear that phrase, it's the third rail. Think about an electrified a subway, or an above ground transportation system. A lot of times, sometimes you would see like a pole that goes up and attaches to a wire or is in contact with a wire, and that would be how they get electricity. But there used to be some of these transportation systems to where there'd be the two rails for the wheels of the car, of the subway or whatnot, and then the middle rail was electrified. And so that phrasing just meant never touch the third rail, because that's going to shock you. And so for a long time, they called Social Security the third rail of government politics. Something that you should never touch. But for those who are my age, Social Security might not last by the time I retire. I don't know. I don't know if it'll last for any of you youngins. Anyway, because it's such a big part of the federal government's budget, there's actually a statement of social insurance, basically doing a present value, saying, we believe in the future we're going to have to spend this money. Now, notice that they've thrown in the word actuarial expenditures over revenues and the assets. It's because Social Security is based upon demographics. How fast is the population aging? How big, each year, how big will the population be that needs Social Security? That means both how many people move into the 65 plus range, but also more morbidly is how many people are falling off, meaning how many people are dying that don't need Social Security anymore. So, and who do we go to for that type of demographic information? Well, those are actuaries. So when they say the present value of the future actuarial expenditure, what they're saying is we're going to look ahead in time and decide how many people are alive and need Social Security, and what's the level of Social Security expenditure that we're going to have versus how much revenue. Well, who is providing the revenue? Well, that's also an actuarial thing, because all the people of tax-paying age between 18 and 65 are going to be the ones contributing to Social Security. So you've got a set of the population that's contributing to Social Security, and then you've got a segment of the population that is using Social Security. So this is, I don't know, probably more explanation than was necessary, but it's actually a very interesting part of the federal budget, the federal government's budget. Interesting enough, that the federal government is also audited, and for those of you who have taken an audit class already, They have never had an unmodified audit opinion, meaning there's always been problems with the federal government's financial statements. Just goes without saying. In addition to the federal government overall, all the federal departments and agencies also need to prepare a report. And the Office of Management and Budget, the OMB, oversees that. These are called performance accountability reports. What goes into these? Well, just performance report, financial statements, internal controls, how well they're running and managing their own resources, and then of course an MD&A. Last but not least, not-for-profit statements. Um, we're going to be specifically talking about non-governmental not-for-profits because governmental not-for-profits are covered by the GASB and therefore are sort of like state and local governments. Remember, the not-for-profit statements are sort of statements that are in competition with other not-for-profits to attract donors. So they're providing info, here we go again, info to donors, members, and creditors. And what are they trying to show? What was the level and or quality of the services that were provided? They want donors and people who are helping out not-for-profits want to know that. And also to assess how well management is doing and whether they're using the funds in the correct way. So those are the primary, objectives for the not-for-profit statements. And because it is based upon FASB, we have, if you notice, we've got statements of financial position, which is the balance sheet. We got the statement of activities for the income statement. We got the statement of cash flows. So you recognize all three of those. Which one is missing? Well, the statement of retained earnings, right? There are no retained earnings because there's no share or stockholder type concept with the not-for-profit. So that statement is not there. Statement of financial position, the balance sheet, donor. There are sometimes, very often with the with not-for-profits, there are donor-imposed restrictions. You know, someone donates their estate to whatever type of not-for-profit, and they say these funds will only be used for XYZ. And so a lot of times, even simple things such as endowments, there will be a restriction. In other words, if someone contributes to an endowment, the endowment might have a restriction of we will not spend anything, we will not reduce the level of the endowment. Think about universities with their endowment. They will take all of that money and invest it somewhere, and they're going to try and live off of the interest, right? Or they're going to live off of the return on those investments. What they don't want to do is spend down into the principal. So that's a very kind of straightforward restriction. Do not spend the principal, only spend the interest. So no matter whether it's kind of some unusual restriction or if it's just the endowment sort of restriction of don't spend the principal, those type of funds are kind of earmarked to be a little bit different. There are some funds and not-for-profits where people donate it and they're expecting all of the money is supposed to be used. Like, for example, when the Gates Foundation gives money to help cure malaria or to cure cholera or something like that over in some other country, they don't want them to sit on some of that money. They want them to use all of that money to go for it. So just because some money has restrictions, not all donations have restrictions. So there's going to be two sets of categories under the statement of financial position. There's going to be those net assets that have restrictions and those net assets that are without donor restrictions. And those will be tracked separately. Not only are they tracked separately in the statement of financial position, statement of activities will also show the increase and decrease for each of those two categories of net assets, the net assets with and the restrictions and the net assets without restrictions. And of course, you notice again, even though I'm saying it's like the income statement, it's like the balance sheet, we don't say those, we don't use those terms. It's the statement of financial position. Financial position oversees economic resources. The statement of activities oversees financial resources. Expenses. Now here we can use the word expense more generally because we're now operating under FASB. Expenses incurred. I think there's a moth flying around. Expenses incurred in direct support of programs versus support activity. Okay, this is kind of what I was talking about earlier about one of the primary ways people measure not for profit entities is of every dollar donated, how much of it is going directly to the mission and how much of it is being used on overhead. And so we're looking at that here in the statement of activities. Expenses incurred in direct support of the program, in other words, how much of the dollar is going towards the mission versus for support activities. Well, what are support activities? Well, obviously, you would have probably thought about management and general expenses. But what doesn't necessarily come to mind a lot of times is that one of the biggest non mission or non program expense is the idea that you've got to use some of that money to go out and raise more funds. You're constantly, typically, you're constantly in some sort of fundraising cost. If you've ever watched um, public television, it seems like every year they'll have a telethon. I don't know if you've ever remember the telethons, but that would be where they interrupted regular programming to raise funds for the local public television station. I don't even know if they do those anymore. I don't know if I watch public television as much. But back in the day when I did, every year you could see, oh goodness, I'm not going to be able to watch TV for a while because they're just going to be running the telethon for. And what was his name? Jerry. There was a guy who was a comedian who was a big telethon person. Can't remember his name off the top of my head. Jerry Lewis. That's who it was. And then there's the statement of cash flows. Cash management is important in any type of business. We know that any type of organization. So there will be a statement of cash flows. What are the audit requirements? Well, it sort of depends upon what area that the not for profit is operating. It could be that the state, because of whatever their mission is, may have some requirements, but it could be the people who've given the money may have some requirements for auditing. You can imagine if the Gates Foundation give you, $20 million, they're probably not just going to give it to you without some sort of stipulations about how they want you to verify that you've used those funds correctly. And that will typically be through some sort of audit procedure to where the Gates Foundation says, here's the money, and we want you to do a 6-month audit or a 12-month audit or some type of audit. So grantors can have requirements on giving the money. And you know what? To get the money, you got to do it. For certain other types of not-for-profits that end up having federal funds, when you reach a certain threshold of usage of federal funds, you automatically trigger a federal government requirement that will require a federal audit, and you'll be treated sort of like a state or a local government entity. Okay, I think those are all the 6 learning objectives, and we got through almost an hour and a half, I guess an hour and 20 minutes. At this point, do you have any questions? I don't have the homework set up. I wanted to make sure everyone could see the textbook and see the online portal. Now that I know you have it, I will set that up. And I guess I'll just leave it open for a moment to see if anyone has any questions. Amazingly, all of the participants are still here. Okay, well, I don't see any questions at the moment. If you do have a question, by all means, you can email me later. But for right now, I'm going to go ahead and close the session. Everyone have a good night. If you've got some ideas about anything that could be done better, I'm happy to hear them. Otherwise, I will talk to you next Wednesday. Thank you, everyone. Have a good night.